Hello and welcome to the Mutual Fund Show. I'm Niyat Shah, and over the next 20-25 minutes, we'll talk about a particular aspect, in fact, 2 or 3 aspects of mutual funds. But in the second half of the show, we'll talk about some of the best mid-cap funds to invest into. A lot of you have gotten messages about a particular scheme from SBI, which promises you 13-14% returns. I found it baffling, and therefore we requested the advisor will join later on the show to talk about that and the possibilities thereof. I know that if I ask Radhika about that, our guest on the show right now, she'll laugh at it as well. But having said that, I won't ask Radhika about that. The conversation with Radhika Gupta, needs no introduction, Lee joins us today, is about a particular kind of fund that Edelweiss has. Maybe they've re-christianed it, but the idea is to try and talk about that particular product and the opportunity that the product represents around us, and which is IPOs. And she joins us right now. Radhika, I hope all is safe. So good having you. It's been a while.
Yes, it's been a long time. So hope you and your viewers are all safe and well.
Yeah, thanks, Radhika. Touch wood, all okay. Let's talk about this, Radhika. I mean, it's an interesting time to be talking about a primarily or a predominantly or a totally IPO-driven product at a time when everybody's talking about taking a bit of a risk off the table.
So I think,
what is this about? What is this product about? Tell us about this.
I didn't predict that the old fund would close and open at this time, but I think it is an interesting time to talk about the IPO market. Now, we're having this conversation, Neeraj, probably 5 IPOs are happening or in the middle. So there is sort of IPO mania going on. And that's not the reason this fund is being launched. It's an old idea. I think IPO investing is significant, but it's not significant because of the narrative you see in the market, which is a cool IPO is coming, let's get listing day gains, buy on leverage and exit it. I think IPO investing is not that. IPOs are any other company, and IPO is an event in the life of the company. But what the IPO investing opportunity represents is something that your traditional equity funds, and I run a traditional equity business, does not represent, because these are new generation sectors and companies that are coming to the market. So whereas you have traditional financial services, which is your banks and NBFCs, your new listings that are coming to the market are your depositories, your RTAs, your asset management companies. Whereas you have traditional IT services, you have a lot of fintech companies, you have a lot of aggregators, e-commerce companies coming to the market, you have gaming. So for every old age sector that is represented in the mainstream funds and indices, there is a new age sector that is coming to the market via listing. If I was sitting in the US, this would probably be a less exciting opportunity. But in India, where even your largest exchange is yet to list today, new listings are fundamentally a very exciting opportunity. And the reason to package it into a fund is because if you look at a traditional multi-cap fund, it probably has only 5 to 7% exposure to IPOs. I think the average number is 8 to 9%. So in your traditional portfolios, you don't have exposure to these new gen companies, which is why as a diversification instrument, this makes a lot of sense. And it's taking the 3 core problems of IPO investing, which we can talk about in detail: access, selection, and holding on, and trying to solve them in a fund format.
Neeraj, so let's talk about these, Radhika. Then I have a few other questions as well, but let's talk about the things that this product tries to address, because a normal question that would come to somebody's mind is that why is it that a special fund is needed for something like this, wherein if a company after listing is good, it can be taken into virtually any fund?
So I think the simple answer to that is it can be taken into any fund. It is not taken into any fund, and the data suggests that, right? The average exposure to this basket of recently 100 listed IPOs is 8 to 9% in a traditional fund. And it's not because a traditional fund doesn't want to take exposure. The reality of life is a large cap fund or a mid cap fund is going to mirror very closely, or at least be indicatively following the existing benchmarks. And these companies don't find their way into those benchmarks. These are largely mid and small cap companies, with the exception of select issues. So to invest in them, you do need a dedicated vehicle. They are not, and they will not be represented in a meaningful quantum in traditional funds. There is also, I would say, a different level of diligence that is involved when doing investing in IPOs versus traditional companies, because these are companies just coming into market. They don't have the earnings track record and history. So the way we manage this is a little different from the management of traditional funds.
Okay, can you talk a bit about that? I mean, I think some of the obvious questions, and then of course I would want you to talk about some of the 3 points that you spoke about in detail as well. But just before that, Radhika, how would this be different? So would this mean that hypothetically that if the fund size and tell us about it, because everybody would love to know about this. That if there's a product which is yours, or maybe there could be other products that could come about, that this would have a finite number of companies, and if indeed there are newer attractive IPOs coming in, then maybe they would have to compulsorily move out of some of the holdings in order to accommodate the others. How does this function?
So this is a limited capacity idea. This is a 500 crore fund because this was an old fund, Edelweiss Making Opportunities Fund, that is converting into Edelweiss recently listed IPO fund. It is not an infinite capacity fund because, as you said, its universe is the recently listed IPO market. We intend to close this fund at somewhere between 1,000 to 1,200 crores. I'm probably one of the few asset managers coming on a channel and saying this even before the fund is open. So it is a limited capacity idea, one. Secondly, it will invest in a basket of 30 to 40 IPOs. It's benchmarked to the new NSE India IPO index, which means 80% of it has to be the last 100 IPOs. That is a pretty wide universe, actually. That gives you a couple of years of IPO history. You have this little flexibility of 20% just so that if something goes from 100 to 102, you don't have to exit it and you don't have a large amount of churn. And the idea is that you bucket companies into either sort of secular compounding stories or cyclical stories. You take larger weights in secular compounders, smaller weights in cyclical companies, and you hold about 4% per company in this 30 to 40 stock portfolio after doing all your due diligence in the company. So that's broadly how this idea is constructed.
Okay. Radhika, is there, when you have a product like this, is there a sense or a target in mind about what's the anticipated return that a product like this could give out? Because when we put this teaser out, right, about this thing, and on my personal Twitter account and Instagram, so some people were talking about how the riskometer rating for this is not very low, or in fact is high. So what are the returns? What are the risks associated with investing in a product like this, according to you, and something that the investor should also keep in mind? Because I've always heard you talk about risks upfront about your products.
So this is a thematic idea, and it is, I think, and we've run it for 3 years, right, Neeraj? It's not a new product. So I can quote data from the past 3 years of experience. This has the kind of risk you should associate with a mid and small cap fund. It was formally benchmarked to the multi-cap index, I think maybe mid and small cap. So the average portfolio composition usually is about 60% mid and small cap, the balance large cap, because you do have some IPOs. Its volatility, therefore, is similar to those kind of funds. Its return profile, it's very, very difficult to predict return profile in anything. But I think you should see multi-cap plus kind of returns. I think the last 3 years, its track record as a closed-ended fund has been exemplary, of course. And that was an average IPO season. I think 2018 to 21 were average for IPOs. So I think we are optimistic about the road ahead. But please remember, this is not a core portfolio. It's my fund, but I will never say it's a core portfolio holding for anyone. It is a satellite or thematic idea. But if you're looking to get access to IPOs, I think the one thing a fund vehicle can do, which an individual can't do, is we can participate as anchors, we can participate as qualified institutional buyers, and we can also participate after listing. This is something that is unique to a fund format, because these days everyone's asking, what can a fund do that an individual can't do? In the case of IPO investing, there's definitely something that the fund brings to the table.
Yeah. Just one small question, and I'm guessing, while I know the answer, or I think I know the answer, I would love to hear it from you. Would this fund be constrained from investing into, let's say, a company which recharts its growth path suddenly, either makes a discovery or a management change or a corporate action, and you can see in front of your eyes that this company will do really well, but it's not a recent listing, and therefore would this fund have that constraint of not being able to, or have you kept some leeways for extraordinary opportunities?
So I'll give you the technical answer and the practical answer. The technical answer is that 80% of the universe is recently listed IPOs. So there is a 20% flexibility. The practical answer, which I think you already know, is that Edelweiss, we have believed in running funds true to label. If it is a fund where people are coming in for recently listed IPO exposure, that's what we will do. It could be top 100. Could you go to the 105th or 110th IPO? Yes, you could. But would you hold Page Industries, which IPO'd in 2007 or 8, or HDFC Bank? Because everything was an IPO company once upon a time. I don't think that would be right to the investors. So at the risk of skipping opportunities, we also have to be true to what the mandate of the fund is.
Okay. Radhika, one last question. What are you guys at Edelweiss telling investors currently at these levels? Staying invested is probably an all-weather answer, but is there tactical merit in trying to be a bit cautious at these levels? What's the equity advice to investors from your house?
I would tell you this. I think markets are healthy but precarious, and it is a time to be calm and quality focused. I always joke that, Neeraj, when markets are at all-time high, caution unfortunately goes to all-time low. And this is the time when most mistakes are made. So keep a tight eye on quality. I mean, if things are expensive, at least focus on things that are more quality oriented in nature. Never forget your asset allocation and stretch the limits of asset allocation. And finally, do what makes sense for you. Just because everybody else is talking about some asset class or something else, don't push yourself on that. So be cautious in how you think.
Okay, call. Radhika, it was lovely talking to you about this re-Christian product, so to say, and one of its kind, really. So pretty much no competitors or no peers out there to compare it to as well. But keep up the good work and all the best. And thanks so much for speaking to us. But you should come more often, Radhika. We speak at very long intervals. We should try and change that.
That is entirely at your mercy. So I'm always there.
Okay, sounds good, Radhika. See you soon. Thank you for joining in today.
Thanks, Neeraj. Good talking to you.
Likewise. All right, that's the view from Radhika Gupta. Now, viewers, like I said at the start of the show, that while we'll be talking about this IPO